All right, so welcome to the Outstanding Ohio Educational Event of the Month. This month's topic is the closing process. So, a lot of people think, okay, great, I got the offer accepted, or as a seller, like we're under contract, we're good to go. But there's actually a lot of things that happen between the time that you go under contract and the time that you close. And the title company is is kind of the main like coordinator of a lot of that activity. And so I have with me today Andrea Hyatt, who is a partner at American Title Solutions, and she's going to kind of walk us through the process. If you have questions along the way, you can ask them, or we can save questions for the end. And I'm going to, I should introduce myself. I'm Erin Johnson. I'm a realtor with eXp Realty, specializing in the Copley, Fairlawn, Bath, and surrounding kind of Akron suburbs, Summit County. Also do some work in Medina, Cuyahoga, Stark counties, like surrounding areas. Okay, so I'm going to share screen. And where is it? There. No, that is not it. Where did it go? I had it downloaded. Sorry. There it is. Okay. And then I'm going to turn it over to Andrea.
Great. All right. So thank you, everybody, for being a part of this conversation. As Erin said, the title and escrow company does a lot of the coordination once the contract is executed. So as the buyer or seller, you guys get a home under contract, and then the agent will turn it over to the title company. They'll also give a copy to the lender if it's being financed for the buyer. And so the title company and the lender, we go on parallel lines, doing our individual underwriting processes. And then we kind of like come back together to coordinate, and then we branch back off again. But one of the things for general consumers to understand is there's going to be a lot of information that is asked of you and required of you. And it's, a lot of people who maybe haven't sold a home yet, or maybe it's been 20, 15 years since they've sold a home. There's a lot more data that's required. Things have been put into this digital realm. So a lot of things are happening online that maybe used to happen in person, which can make everything very effective and proficient. However, sometimes you feel a little bit lost. You feel like you're in a whirlwind. So Erin and I were talking, and she thought that this would be a really good idea to go through it. So what we're going to do, we've got this little chart, and I'm just going to kind of go through a high level overview of what happens when the title company gets it. So, okay, so you get a contract, it's executed. You're going to give the earnest money, if you're the buyer, typically to the title company. So with us, American Title Solutions, you can do that online. So that process looks like either a wire. You can go directly to your bank and have them wire the earnest money to us, or you can also drop a check off to our office or mail it in. And then we have something called Earnest, which has two N's in it, EARNNEST. And that's an online platform where you will coordinate with your bank, kind of like an ACH debit, to go directly to us. So those funds, that's kind of like your promise to, yes, I am interested in this house. I do want to move forward. Okay. So once we get the contract and we get that earnest money, then we are going to start our search. Okay. So we are looking at every transfer that's happened previously. So let's just say I bought it from Mr. Smith. Mr. Smith bought it from Mr. Jones, and Mr. Jones bought it from who knows. But we're checking every single transfer going back 42 years to ensure that that transfer was done properly, that those legal documents were done properly, and we're making sure that there are no outstanding liens on the property. A property, we cannot transfer property without it being free and clear, which means there are no liens associated with the property. So an example of a lien would be a mortgage. Okay, so lots of people have mortgages on their property, but it's something that does need to be paid off before it can transfer to the next party. Property taxes, those are something that need to be paid current until the property can be transferred. Sometimes a mechanic's lien can be on a property, and that would look like if somebody maybe had a chimney repair or maybe a siding repair done, but they didn't pay the contractor for that work to be done. The contractor can put what's called a mechanic's lien on the property, and that would need to be taken care of before the property could transfer. So those are some of the things that we're taking care of. We're getting the amounts that are due. We call those payoffs, and we're making sure that we have the proper parties so that we can get those things paid off. As we're checking those transfers, if we see any kind of a mistake on the legal paperwork, we're going to work to get that fixed. If we see that maybe an heir, a proper heir, didn't sign a deed, we're going to go back, we're going to find that heir, and we're going to get that person to sign. We call that a cloud on title. So we want to make sure that those legal documents have been executed properly. Okay, so that's one of the things that we do. Once we get that search back and we see what's associated with the property, we're going to give what's called a commitment to the lender if the property is being financed. We're also going to give a copy to the buyer so they can see what's associated with the property as well. And we're going to, the commitment says, hey, these things need to be taken care of before the property can transfer. So those are requirements that need to be done. And then there are also exceptions to the property. And exceptions are something that as a title insurance company, we're not going to cover. An example of this would be if there is maybe an easement on the property for something. Let's just say a shared driveway. If there's a shared driveway and there's an easement, we're going to say, hey, there's an easement on this property. You guys know about it. It's recorded in the documents. You can't come back to us and say, hey, we didn't know that there was the shared driveway, because we're showing you where there's a copy of the easement. You know that it's there. Okay. That would be an example of an exception, something that we don't cover. Another example would be like covenants or restrictions that are on the property. For example, a deed might say, hey, there's a restriction on this property that it can never be a chicken farm ever. And it's in the whole time that the property is in existence. A lot of times we'll see these weird exceptions in rural areas, or where there's maybe huge farms that have been parceled out. They don't ever want a chicken farm on this property. And so that's on the deed, and that's something that we can't change. So you can't come back to us and say, hey, we didn't know it couldn't ever be a chicken farm. You've crushed our hopes and dreams. Well, it's right there in the deed, and it's in black and white for you to see it. So that's an exception. We can't change that. You can't come back to us and say you didn't know about it. So those are example of things, but you get a copy of that up front so you know what to expect with this property. And if there's any kind of things that you maybe didn't know, it hopefully is going to show you those. So along with that, we're also going to be ordering a survey. Now, a survey is required if the property is being financed. The lender is going to require it because they want to see that overhead view, and they want to see what's associated, where the house is, if there's anything encroaching on the land, or if anything on your property is encroaching on somebody else's property. They want to make sure that this asset that they're loaning money on, they want to make sure that there is nothing that's going to diminish its value. Okay. Now, the lender is going to require the survey. If it's a cash transaction, there's no requirement for a survey. You would just say, hey, we want a survey on this property. That's also going to show you in black and white what's associated with the property. So you guys are going to get a copy of both of those things. So, so that commitment and that survey, they're given to the lender, and the lender's going to finish their underwriting based on that commitment that we give them. Okay. So that's one little leg. As we're working on that, a part of our processing team is going to be sending intro documents to you. Those typically are done digitally, although we can, snail mail them, or you can come into our office to sign them. But there's a lot of things that we need to know. For example, we do need to know social security numbers. That is, as a seller, that's one of the biggest things that we use to clear liens. Some companies, some lien companies, they'll take every, Andrea Hyatt, and they'll slap a lien on it just to find the right person. And so we'll look at that and we'll say, okay, well, Andrea Hyatt's social security number is 1 2 3 4 5 6 7 8. So that's not her, because that lien was on somebody else's social security number. So that's one of the biggest ways that we're looking to clear liens for the seller and for the buyer. We talked about the search and what that does. We've examined the search. Number 4, we've given the commitment to the lender. The other half of that is the pre-CD. So the pre-CD is what our numbers for closing are going to be. So based on the title insurance and based on our fee for closing everything, we're going to send those fees to the lender, and the lender is also going to send us what their fees are. And so we kind of have this crisscross. We're checking their math, they're checking ours to make sure that we're called what we'd like to call as balanced. Number 5, we're going to make sure that all those liens that we talked about, everything that we searched, we're going to make sure that they are released, that they're taken care of. The deed is going to be ordered. So as the buyer, we're going to ask, how do you want to take title? You can take it in your personal name. You can take it in an LLC. If you have a trust, you can put that property in the name of a trust. But there are a lot of different ways that you can take title, and we need to make sure that if you're taking it in a trust or an LLC, that we have the proper documentation. For example, an LLC, we need the operating agreement that states that you have the authority to sign on behalf of the operating agreement. We talked about the survey, and then number 6, we're getting those payoffs.
Andrea, can you talk about the difference between what's the title versus the deed?
Yep. So we use those names interchangeably. Title, deed,
Same thing.
They're both the same thing.
Okay. Just wanted to double check.
Yes.
And then I almost always get the question with those intro documents. They're asked whether they want closing protection coverage. I don't know if you're going to cover that later, but can you go over that?
Yeah, absolutely. So part of our intro documents, obviously we're asking your pertinent information: name, address, social security number. Are you married? Which, by the way, if you are separated, you are still married, so you do have to check married. Part of those, the Department of Insurance back in 2008 came up with what they call the closing protection letter. And that's something that you have to choose whether or not you want the coverage or you don't. And it's to cover the finances that you bring to the title company. So it can include your earnest money, it can include your down payment, anything that you bring to us that we have in our possession. It covers it from the time we have it in our possession until it's dispersed out. So let's just say you're coming to the closing table with $10,000. That's your down payment, and that's whatever you owe for closing. You're going to wire us in money, or bring that check. From the time we have it, it's going to cover it from fraud, theft, or misappropriation of funds. Okay, so fraud, somebody, should hack into our system and, take it. Well, excuse me, that's theft. If somebody comes in and takes it, that would be theft. Fraud is if we fraudulently, send it out to somebody else, just, one of our employees, is fraudulent. And the misappropriation of funds is where, let's just say you took title in your LLC, but we actually put the check in the name of you personally. Technically, that's misappropriation of funds. We have to disperse funds in the name that everything is vested in. Okay, so it's got to be the legal entity. All right, so closing protection, to Erin's point, that is our number one question that we get asked is, what is closing protection? It is a very—
And the buyer has to pay something and the seller and the lender, right? And is
So
that covering three different things or?
yeah, so on the buyer side, if you're getting financed, the lender is going to require that you pay their portion. Okay. So let's just say I'm a lender and your property, the sale price is $150,000, but I'm only loaning you $100,000. The lender's portion is going to cover their $100,000. Okay.
Oh, okay.
Yes, yes. But if as the buyer you choose it for your portion, it's going to be covering your $50,000 that you brought
Okay.
to the table. So it's only the money that you are bringing, and the lender requires it on their portion, so you can't get out of that. Um,
Hmm.
yeah, and then on the seller side, it's covering the seller's portion of it. So the buyer can elect to have it, and the seller says, no, I don't want it. That's totally fine. So if I'm a seller and I'm getting $100,000 back in proceeds, it would cover your $100,000.
Okay.
To answer your question?
Yeah.
Okay.
It seems on the surface a little bit like triple dipping, but I guess it's it's if something happens from the money between here and here or here and here or here and there and a portion of the money, and it's kind of slicing and dicing, but and it's not expensive, right? I think it's like 20, 40, $60 or something like that, but
Yeah.
everybody always asks me what it is, should we do it? And it's like, the chances of something happening are probably slim, but like for $20 or $40, like maybe you better just do it, like
Yeah.
you're spending 50,000, 100,000, whatever it is, right? So yeah, just want to make sure we covered that. Thank you. And then can you also cover, you talked about with the survey, like we might not cover that, or like, so just title insurance in general, like what exactly is getting insured and what's covered and stuff like that.
Yeah. So title insurance is covering anything that could affect your rights to the property. So for example, your usage, there's 10 key components to title insurance that have to be there. For example, ingress, egress. You have to be able to get on and off of your property. Okay, so that's one of the things that we need to have in order to be able to give a title insurance policy. There are several things, but we're checking to make sure, when we talked about the search, the things that we're checking is the transfers. Is this going to be a legal transfer? It's saying, yes, you own, or you're going to own 100% of that property, and nobody else has a right to use it or come on your land. It's a bundle of rights, and it's covering what you can do. It's your use and maintaining of that property. So it's really covering that, and it's covering anything that has happened in the past that could affect those rights. So homeowners insurance, like hazard insurance, that's covering like if a tree falls on your yard or on your house, or there's damage to your property from like a hailstorm. That's going to help you from anything in the future. This is helping you from any kind of action that you maybe couldn't know about that has happened in the past that would affect your rights to the property. Is that good? Okay. Okay, so where are we at? 6. Okay, so we're getting the payoffs, we're getting any invoices or reports, anything that we need to pay out of closing. So that is the insurance portion, and then right underneath of it says lender is beginning their underwriting process. And so the lender is going to do several things. So they're verifying employment, they're checking any kind of bank deposits that you have, they're doing a credit check, they're doing all of their due diligence on their side to make sure that you qualify for the loan. They're also going to order the appraisal. They're making sure that the value is there from the home. And then they're going to finish their underwriting. And then once they get through all of their process, then they're going to give us what's called the clear to close. Okay, so that means that we can then contact the clients and say, hey, we're going to schedule you to sign all of these documents for your property. Okay. So you can see numbers 1 through 10. All of this has to happen after the underwriting process. So it is, when your agent, when Erin is saying, hey, we need, 30, maybe 45 days, depending on what's going on. There's a reason why we need so much time, is because there are a lot of puzzle pieces that have to get sorted out in order to put our picture back together. Okay. So we're going to schedule everybody to sign their documents. A closing disclosure is given 3 days to the buyer prior to closing. So sometimes lenders will give that, at day 10. Sometimes they're giving it at day, 27. But most of the time, lenders are giving it a little bit sooner once they get a really good handle on those figures. Once we kind of coordinate with the bank and go back and forth to make sure that we have their figures and they have ours, and after we have scheduled you for closing, that's when we can give you your final amount. So one of the things the lenders have to do, and that we have to do, is once we get the actual date of closing, we have to figure out what the property tax proration is, because that's figured on a per diem or per day basis. Same thing with mortgage interest. Okay, so we're calculating the property tax, and we're giving the bank that figure, and then they're figuring out the mortgage interest amount per day, and they're going to give us those numbers. So we're giving them some figures and they're giving us some figures. So once we get those sorted out, then we can give you your actual figure that you need to come to the closing table with. Okay. So then you're going to sign those closing documents. And then number 6, those documents are sent, if you're being financed, once again, to the lender for final approval. So one of the things that happens is that big package that you send, which sometimes it can be 100, 200, I've seen 250 page packets that people have to sign, is the lender has got to go through there, and we digitally scan these, but they have to make sure that there are no blanks, because these are legal documents. So there are not allowed to be any blanks on legal documents. They have to make sure that signatures are all matching, that there's no fraud, that everything is dated correctly, that, all of the initials are filled in. So it's a really tedious process for them to check every single page. But once they approve that and they say it's been done correctly, then they can fund us, which means they're going to send us money. Okay. And from the money that we get from the bank, we're going to pay off the seller's old mortgage if they had one. We're going to pay off any liens. We're going to disperse commission. So anything that needs to be paid out of this money, we're going to do that. Okay. But not until we send it down to the courthouse for filing. All right. So the filing process is a 3-step process. A lot of counties will allow us to do what's called an e-filing, which means we can electronically file it. However, not all banks will allow an e-filing. And not all counties will allow an e-filing either. So it's kind of dependent on geographically where you're at. Okay. But either way, whether you're electronically filing or you're physically going to the courthouse and filing, once they get those documents, it's still a 3-step process. So the first step is tax maps. Okay. And that's going to say, yes, this is 123 Main Street, and these are the geographic borders. This is the correct legal description. They're making sure that, this is the correct property that we're talking about. Okay. That it's attached to the correct deed. Then step 2, which is a different window, is conveyance. And the conveyance is saying, yes, it's going from me, Andrea Hyatt, to Erin Johnson. All right. And then after that, the 3rd step, which is the final step, is going to another window, and that's the actual recording process. So we're going to record the deed and then the mortgage. And then once that's done, then we can say, hey, we're going to call your agent or email her or text her and say, hey, congratulations, it's filed. And she's going to call you and say, hey, we're filed. Congratulations, it's moving day. So it's a tedious process, and there are lots of steps to go through it. But as Erin said, we coordinate with the lender, we coordinate with the agent, and there are lots of moving pieces and parts that happen to get it filed. So,
right. And so just to be clear, in case people don't understand, like when you're saying we file it or you file it and we go to the windows and stuff, title does all that. Like the
Yes.
buyers, the sellers, they sign, and then, but I think some people don't understand, like, well, today's closing day and I signed, so like, why can't I get my keys right now? Or like, why don't I have my money yet? So
Yeah.
it's, both parties have to sign, which in Ohio it doesn't have to happen at the same time. We don't do like a round table, everybody signing at once. So the seller may even sign a couple days earlier, or they just might sign on a different day, different time. The buyer signs, the buyer wires their money, but then they got to do all these checks back and forth, and then they got to go and actually file it before we
Yeah.
have to wait till we get that notification that it's been filed to say, yes, now you do officially own it. Now, if possession was same day, that you can get the keys. So it doesn't happen like as soon as you sign, which I think some people don't understand. And then talk about how long it takes for the seller to see the money usually.
Yeah. So just to piggyback off of what you're saying, so we're in Akron, Ohio, and geographically in our area, that's how it's done. But there are some areas still in Ohio that do escrow, or excuse me, roundtable closings, like you alluded to. So you might be from another area that's how they handle it. But I will tell you in
Kind of
Summit,
Northeast Ohio, mostly.
yes,
Yeah.
Northeast Ohio, that is typically how we handle that. But to answer your question though about, how long does it take for the seller to get their money? So we are going to disperse that money the same day. So if on your documents you chose, hey, I want my proceeds to be wired to me, we are going to hit that button for those monies to be sent to you that same day that we actually filed, as long as that's what the contract stipulates. Sometimes, like Erin said, it's, filing one day, but then possession is not till 3 or 5 days later. But possession really doesn't have anything to do with dispersing. We're still going to disperse those funds out, on the day of closing. The caveat to that would be every bank is different with their wire window. So if you chose to have funds wired, typically like they have like a 3 o'clock to 3:30 cutoff time. So let's just say paperwork wasn't really signed until 2 p.m. in the afternoon, and then we didn't get funded by the bank and we couldn't file. Let's just say we couldn't file until 3 or 3:30. We're still going to hit the button for that wire to go out, and it's going to come out of our account. But the catcher or the receiver from the bank that you have, they've already closed their window, so they're not going to catch it until the next business day. So that's the only caveat to that, is if it's later on in the day,
Sure.
you may be until the next day.
So usually like within 24 hours would be,
Yes.
Yeah.
Yep.
And then talk about like where you sign and when you sign, and when do you have to be there in person, and that whole.
Great question. So we will send a closer to you to sign anywhere you want. Obviously we'll go to we'll go anywhere. We've done international signings. That's not a problem for us. We have different notary places that we will utilize. We have an office that people can come in. We have several offices that people can come in to sign. You can sign electronically on a couple of conditions. If you're a cash buyer, you can sign electronically, which means you don't have to come in. If you're a buyer being financed, sometimes we can have you sign electronically. However, the bank has to approve it. So really it's the secondary market that is the driver of that. Even though we are in a digital age, not every bank, the secondary market, they won't all approve a digital signature. So sometimes we do have to have a wet signature, which means we have to come to you or you have to come to us, and we have to physically get, we call it a live signature or a wet signature from somebody. And really that's going to be dictated by the bank.
Okay.
Yeah. So that's
and does the buyer, do they always have to sign on closing day and the seller can sign early, or what's the rules on that?
Yep. So if you're being financed, the lender is going to say, hey, they have to sign on this date. And if they can't sign on that date, then they've got to redo paperwork all over again. So they have to sign on the date. The seller can sign whenever.
Okay. So yeah, just something to be thinking about as you're picking closing dates, like what's your availability? And it sounds like if you are out of town, there's workarounds and you can send somebody to them, but it's probably best to be in town if you can be.
Yeah, and we've obviously worked with people who are out of town, or if they're moving, or if they are out of state.
Coming from out of, yeah.
Yeah, absolutely. We will coordinate that, and we're used to doing that. So we have avenues to make sure that we're helping and being, you know,
And
to
it's helpful to
facilitate.
know that up front or as early
Yeah,
as possible, because you
for
have to
sure.
mail paperwork and things like that sometimes, right? Yeah.
Yes, yes, for sure.
Um, okay. Um, what are some of the common things that you uncover in a title search?
I mean, really the biggest things, we ask people what mortgages they have, and we find that people will list, their mortgage, but a lot of people don't realize that a home equity line of credit is
Mm,
an actual mortgage. And so they might have a mortgage, and they also have a home equity line of credit that they didn't disclose. So we
okay.
find that a lot. So that's something to note. If you have a HELOC, a home equity line of credit, that is a mortgage, and we do have to pay that off before closing.
Yeah.
Um, one of the things that we find is, people, if they've had some things happen in the past, they kind of think that they will fall off after 7 years. And
Mm,
that's, true for the credit report. However, that's not true for a judgment lien. Judgment liens have a longer shelf life than your credit report. So for example, some judgment liens can be, 7 years, some of them are 10, some of them are 15. It just depends on what they are. And so maybe it's something that maybe happened when you were in college and you just totally forgot about it, but that judgment is still there, and we do have to take care of it before you can sell your house. We have seen it pop up because we do have to search the buyer as well. We have seen it pop up where a buyer had, tens of thousands of dollars in credit card debt, and it was off of their credit report, and so they thought they were okay to buy. And of course it popped when we searched them, and they didn't have the funds, so they couldn't buy their house
oh,
because,
wow.
yeah,
Okay.
yeah. So we do search the buyer as well
Interesting.
to make sure. Yeah,
Okay.
we see child support liens, we see IRS liens. um those are, I would say, those are the most common ones, next to property tax liens. Those are probably the most common.
Yeah. Is there something the buyers or sellers should do up front to kind of make the process go smoother, or to like check? I mean, I had a situation where there was so many tax liens on the home that they couldn't sell. And it's like the
Yeah,
buyers ended up kind of getting into a bad spot because they sold their house, they had nowhere to go, and they couldn't
yeah,
sell the house. Like, is it something you should be trying to check before you write an offer, or
absolutely. I mean, it's I think as a consumer, if you can just be upfront with your agent about, like, hey, like, we might be close. There are some things you can do. There are some short sale options, which means, you can go to the bank and say, hey, we don't have enough money to pay this off. Will you take a short on it? That's where the short sale comes from, when you
Mhm.
take less money for it. And sometimes your agent can help you facilitate that and walk through that with your bank ahead of time. If they know about it, they might be able to refer you to what they call a short sale specialist, somebody who does specialize in those, to help you go through the process. I think knowing is kind of half the battle. And if the title company can really help, if you have like any of those lien releases that you've received in the mail, make sure that you keep those, because sometimes we have
Mm.
found that banks, they're not recording releases, or
Wow.
they've sent it to, well, they say they sent it, but it never got filed. And so
Mm.
if you keep that documentation, we can then file it on your behalf and get that taken care of. So documentation is really huge.
Mm.
Keep any paperwork that you have from your bank, anything that you get in the mail, keep it, because chances are it can be utilized to help you.
Interesting.
So,
To
yeah.
that point, isn't there something too, if you keep the title, what is it, some of the title documentation from when you buy, that helps you when you sell? Does it save you money or something?
Yeah, so if you sell your house within 10 years of purchasing it, you do get a reduction in your title insurance premium. So it can be up to 30% of the
Okay.
premium. Yeah, so it can be a significant amount of savings. So yes, keep that policy.
The title
It's
insurance policy
your
is what you
title
want to keep.
insurance
Okay.
policy. Yep.
There you go.
Yes.
What are some other common like pitfalls in the closing process or just misunderstandings, questions you get? Any other?
Um, I think one of the biggest things is responding. To respond to the title company, respond to the bank. If we are reaching out and asking you for something, time is of the essence. And none of these mortgage companies, lien companies, the government, like they operate 8 to 5 Monday through Friday, and that is it. So we have
Like
a
that,
very
yes.
short window to get these things done and taken care of, and you'd be surprised how fast time whittles down.
Mm-hmm.
So some of them have, like when we're trying to get payoffs from certain banks, they say, hey, listen, it's a 2-week turnaround window and that's it. And so we know if we've got our search and it comes back that we've got one of those banks on the line, and if we don't have the loan number and we don't have your authorization, we're stuck in the water. So we've got to have your authorization back, that we've got your permission to talk on your behalf, and we have to have the
Oh,
loan number. We can't
okay.
pay off a loan if we don't have the loan number. So
Okay.
same thing with the bank. If the bank is saying, hey, like we need your, if the month rolls over and they say, hey, we need your bank stub for last month, get that to them ASAP, because they can't finish their underwriting until they have that. They want to make sure that you don't have any, insufficient funds. Do you have any deposits that are over a certain dollar amount? They're checking every single thing in your history to make sure that there's no red flags. So
Mm-hmm.
if they say, or if we say that we need something, respond. That is
Yeah, that's
our
number one thing.
biggest
Yeah.
advocate. Yeah.
Yeah. Yeah, I mean, I'll just point out the other things that are happening kind of in this contract to close time frame outside of all the stuff that Andrea mentioned with title and lending, is there could be other, contingencies on your contract and like an inspection. So, going through that process. The appraisal is another place where sometimes things can get hung up. If the appraisal comes in short, there could be some renegotiation or some things happening with that. And we covered that in one of the previous webinars. Final walkthrough, if something comes up on the final walkthrough right before you close, that could cause a hiccup. Or if there's a contingency on selling another home, making sure that that happens and before you can close. But I think what the title company does and the lender is a big piece of getting from contract to close and making sure that that goes smoothly and that you close on time and that they're paying attention to the dates. And like she said, knowing like, okay, now this is going to take 2 weeks and we got to get that back. And there's a lot that happens. It's not just like, okay, now I'm under contract and it's gonna sell, no problem. So thank you for all that. Anything else, Andrea, that you would add? Think people should know, or questions that you get?
I have a quick
Um,
question. I'm sorry if I can interrupt.
No,
Is
go
this
ahead.
all
Thank you.
the same? Is this all the same for vacant land as well?
Good question.
yes. Yeah.
Okay.
Although there's not an actual house involved, we do still have to check the chain of title, and make sure that the chain of title is accurate. If it's a cash transaction, then obviously, the bank, whether it's vacant land or property that has a house on it, if there's no bank, then obviously there's no underwriting to do with the bank. There's no appraisal. So yeah, it can go much quicker if it's vacant land, but yeah, we are still checking everything the same as if it has a house on it. Good question.
Yeah.
Great. Thank you.
Any other questions? Okay.
Okay.
All right. Well, I really appreciate your time and I hope people find this useful. If you need to reach out with questions, I'll put Andrea's information. I'm going to upload this to YouTube. I can put her contact information there and mine as well. If there's anything we can do to help you, we're happy to help.
I do have one more question,
Oh,
Erin.
yes,
I
go ahead.
so when you were saying about the people that um they sold their house, but something happened with they never got it because of stuff going on with the other with the
Yeah.
seller. How do you prevent that? Don't sell your house until the title work comes back?
Well, I mean, sometimes you're going to know about things as the consumer. Sometimes you know. If you think that it's going to be messy, like if you think that there are a whole bunch of liens, I mean, if you have notices that you're getting in the mail,
Not you from the
creditors.
buyer standpoint, I'm sorry, because the buyer sold their house
Oh,
and
you were
then they
saying like, okay, I understand what you're saying.
Yeah. Well,
You
so
have,
yeah, I guess the question is, and I think you told me, is there some like website that we just as like general people can go check and see if there's liens against a property, or like
sure,
some way for us to snoop and get a feel for it?
sure. You can go to the county recorder's website and you can check everything's public record and you can see what liens are associated with the property. Yeah, absolutely.
oh, like the auditor's website,
No, the recorder's website.
the recorder's
The
website.
recorder's website, yes.
Oh, okay.
Mm-hmm.
So if it's been recorded, but is it possible they exist without being on that website, or that's less
Oh,
like
for
it's
sure.
possible but not common, or how?
Oh, yeah, absolutely. So that's one of the biggest takeaways about title insurance is that it covers things that are unknown. So if something is not filed and it's still out there, title insurance will cover it. So even
Okay.
if so we've got different ways that we're searching the records to find liens that are out there. But if it's not filed, yeah, title insurance will cover that. And that's, I mean, you're paying for peace of mind. You don't want anybody, your home is one of your biggest investments. I want to make sure nobody else has a right to it. I don't want some crazy, Aunt Bertha coming in and moving in because she says, hey, my grandma
Put it
owed
in the
her bill.
basement.
But
Uh,
what do you do from the buyer's seller? I mean, from the buyer's standpoint, that's from the seller, right?
well, I guess in this situation, the seller had the tax liens on the property that exceeded the proceeds, so they could not sell the house without clearing these liens, and they were having trouble getting through to the IRS to get them to clear them. And so the buyer didn't know about that when they went under contract, and it may have helped if it was on the county recorder site to know that before writing an offer, because maybe they wouldn't have written the offer or asked about it, or something like that. um and yeah, the sellers, I think they knew about it, but they didn't tell the agent. And yeah,
But the
so
buyer wouldn't normally get, I mean, could they can't do anything with title, right? I mean, how do
they can't buy the house without a clear title.
right, but they can't get their own title search stuff, can they? Because that's on the
Hmm.
seller's house.
Well, anybody can get a search on any property.
Oh, you can.
Yeah.
If you want to pay for it, right? Like,
Yeah, you have to
yeah.
pay for it. We have a
Right.
lot of investors and people that are purchasing things like on auctions and sheriff sales. And so they'll
Mm,
contact me and they'll get a search ahead of time. You're gonna pay, $250 for your search. So it better be something that you really want. Otherwise, you're out $250,
yeah.
That's
And you got to
pennies
have the
by
time to do it.
spending the type of house,
Mhm.
That's
Yeah.
okay. So you can,
Mhm.
all right.
Yeah.
Wow. Okay.
Yeah.
And you'd have to have enough time to do that. Like, this market's moving so quick that it might be a challenge, but because that could take, I would guess, probably at least a couple of weeks to get the search if you were just
Uh,
doing a search, or
Yep. Yeah. I
Okay, that
yeah,
mean,
makes
10 to
sense.
14
Okay.
business days. Yeah.
14.
Okay.
Okay. Yeah. No, good question though. Any other questions?
Great. Thank you. That was
Thank you.
great. Thank you.
Thank you guys. I appreciate being here. Thanks, Erin.
Yeah, thanks.